Okay, how is it going, everyone? Let me just. Okay, how's it going, everyone? How's everyone training week been so far? Just gonna go ahead and share my screen here. So yeah, who wants to go first today? We're gonna obviously get stuck into this mental mode session. So yeah, if you guys, especially if you've had a tough week, yeah. All right, Chris wants to go first. Chris, remind me of your name. By Tradezilla. Kristen. Kristen Phoenix. Awesome. And what do you want me to cover? Because I know obviously we've done you previously. Do you want me to just do the whole thing again or a specific time period? But yeah, let's get into this. So this is obviously Kristen's data. So shout out Chris. So as you can see here, we're currently down 8,000, and this is on his live account. So things to take a note of here, right, is obviously the trade win percentage is pretty good at 55%, but the thing that's letting him down is this risk to reward. So this average win to loss per trade here. Looking at this month's data, it looks pretty consistent in terms of the green to red days. However, the thing that is really letting you down is obviously these big red days. So as you can see here, your biggest winning day is 67.30. But these big red days are the things that are letting you down. So like, for example, this 200L that's what's holding you back here. Now, is that because... So what's your stop loss? So you're risking 150 a trade. So it's not actually unreasonable. So the issue is your actual winners, it seems, don't seem to be going far enough. We just look at one of your trades. This was a long. Okay, so that was a good scalp to get out. So you actually got a good exit there. You guys can't hear anything. Can you guys hear me or not? Just want to check. Yeah, okay. Awesome. So yeah, it's this, your average win to loss per trade. That's what's killing you. And now I'm curious because I see that you have multiple playbooks. So I just want to go into your playbooks and see which one you're actually trading the most. So we've got Spencer Scalp is probably the most traded one. So this is the one that you're taking, right? And your average winner is 73.47 and your average loser is 126. So what are you taking on these trades where you're losing 200 plus? What strategy is this? A backside fade. So let's look at your backside fade playbook. Really quick. Backside fade. Okay, so this is your most common playbook. Average winner. So yeah, it's just your R multiple that's really letting you down here. I want to see a winning trade on this. Let's go for this one. Seems like you had quite a big win on this one. So your target is, so you went short here. Now you did actually get a good exit. Okay, so yeah, the issue here is obviously your risk to reward, right? And that means obviously letting your winners run, because you're essentially taking these $90, $100, $200 losses, but you're only making this 40. So whether that be a strategy issue altogether, where we need to improve your strategy by doing some back testing. Have you done much back testing? No back testing. So what I would actually do if I was you, Chris, right? I would actually go back test your strategy a little bit more, right? And actually really refine down your strategy and stick to one thing. Now, if we just go into your playbooks, what's this other strategy that you're using, the Spencer Scalp? How profitable is this? So your profit factor on Spencer Scalp is 1. Your backside fade profit factor is also 1. Okay, so this backside fade playbook overall, yes, technically profitable, but this needs to be sorted out. So this average winner for this playbook to even be remotely viable needs to be at least 1-to-1 here, I would say, with a 62% win rate. Okay. Now I know obviously your win rate, if you try to do this, is obviously going to decrease. But we need to get a way to do this. So what I would do is I would recommend backtesting this a bit more. Let's just look at some of the rules here. Run break of high. Okay, so we need to refine this more. So whether that be getting entries better, right? Getting your exits better, or getting we just need to refine this more, and we need to get this R multiple up, because otherwise it's not going to work in the long run and it's not sustainable. Sorry. Sorry. So yeah, that's the first thing, right? Is the main thing that's letting you down here, obviously, is your losses are just much bigger than your winners, and that's not what we want in trading. So as you can see here, we had this consistent, right? We've got these green trades. It's just the losses that you're taking here are 10 times the size of this. Okay, so I would recommend sticking to just one playbook, really mastering that playbook for now, and really honing in on that strategy, backtesting the hell out of it, getting clear criteria, and really proving to yourself in backtesting, okay, this is my playbook, right? This is my rules. This is how much it can make me over 100 trades, right? And then once we've got that proven data, then go into the market that way. But let's go ahead and take a look at your reports as well, just whilst we're here. So performance. So we've got, see, look, this is what I mean. Average net daily P&L 32. It just needs to go way, way up. And average daily win, right, is 0.5. Average realized R multiple 0.28. So your average realized R multiple, we want to get this up to really like a 2, because your average planned R multiple is 4.78, right? So you're not actually following your strategy here. Okay, so you're planning to make almost 5R, but you're closing after you make 0.28. So what is the actual reason for that? And investigate within yourself. Why am I closing so early? Is it because you're trying to make up for these losses that you've taken and you're just a bit scared, and every time you see a bit of profit, you're trying to just, clutch that back, get that break even sort of thing to just kind of get back to positive. But so long-term sustainability, it's not going to last. So we need to get this up. We need to start holding our trades longer. Like 12 minutes is what you're holding your trades for. And you've got a planned R multiple of 5. We need to get this hold time up. We need to get this average realized R multiple up, and we need to start following our plan and following our strategy more. Now, if that means obviously there's an issue with the strategy, as I say, then maybe we need to head into backtesting and find out, does our strategy actually work? Let's test it over a serious period of time, 100 trades minimum, a year of data, and see what the actual returns are on our strategy, and then we can take it from there. But that would probably be my first place where I would go with this. Let's just dive in a little bit deeper, see if we can refine the strategy based on just some of your reports. All right. So best performing day is Tuesday. So you actually are pretty profitable on Tuesdays. Your biggest losing day is this Friday here, and also your most active day on Friday. So let's see if there's a trend here. So we've got Monday, you come into the week, average loss, average win. Volume is kind of sustainable throughout the days, Thursday being the lowest. Friday, it looks like you might potentially be looking to trying to make big wins on that Friday and trying to hit those home runs, just because the volume's so much higher and the average P&L is so much higher. So that's something I would definitely look at. And again, looking at the SAR multiple, 102 to the loss to a 52 win. So I personally believe, looking at the data here, just compare some of this, do some cross analysis. So what have we got? So you're coming in here on Fridays. Funny enough, you take this big win on these Fridays. So this is great. So on this Friday, like for example here, right? We've come in at 9.45. We make this good money. And then 9.50, we take this massive loss. We lose all of this 9.45 money, right? And then because we lose that, then we go into tilt. And then now we're down 1,000, right? And then that's the kind of process that we end up going through here. Can you see that? Is that kind of the thought process that you're going through in the day as well? You come in, you get this win, right? You take this loss. Now you've lost all your profit. Now you're angry. Now you're tilted. And then you end up taking a really stupid trade. And now you're in a hole 10 times worse than when you started. Does that sound about right? Yeah. Okay, cool. So yeah, this kind of behavior we need to cut out, and we just need to refine the strategy obviously a bit more, and really pay attention to that. Let's take a look at some of your trade durations, just because we know that you are closing your trades a little bit early. Average daily volume. So this being your most profitable. Funny enough, when you do hold it a bit longer, it tends to not go. I mean, you're not really holding your trades over an hour in any sort of scenario. And the times where you have actually, I know it's only really small size. We'd have to look into this. But the times that you have a 70% win rate. But we would definitely have to look into this and see, because the volume here is really, really low. So I'm not sure necessarily what that's about. Looking at your win rates. So let's just go back onto days really quick and look at your win rates for the times. Guys, if you don't know as well, this cross analysis here is obviously new inside TradeZella. So this is really, really powerful feature. So I highly recommend all of you to come and check this out. So let's just take a look at instrument here. Okay, so Monday, Tuesday, Wednesday. All right. Let's take a look at your actual symbols. Are we still just trading? We're trading a variety of stocks. Interesting. So our most profitable instrument. See, like we have a 100% win rate on this, but we've only taken one trade. So what's the next one? Flex, 2 trades. What are you actually trading a lot of volume on? Is there any of these that you've got profitable multiples? This one, BBWI. I would potentially look into trading this a little bit more. I know you've not got much data on it, but your R multiple is considerably larger on this for some reason. So I would look into these trades a little bit. But yeah, I think what you need to do, just in summary, is essentially look into obviously your strategy a little bit more. Try refine your strategy so you can get better entries, higher R multiples, and just really cut down on that tilt, because we can see here that you are having these sort of tilt trades where you're coming into the market and you're giving it back, and then you're kind of, instead of stepping away for the day, you're making the damages worse. So one, we need to cut that out, and two, obviously really, really refine your strategy. If that does mean doing back testing, make sure to go ahead and do that, and just really have sort of clear data where you're like, okay, my strategy works, it's profitable, and over a year, these are the results it can produce, if you know what I mean. So in that way, you have that confidence to hold your trades longer and actually stick to your plan and follow your R multiples. Does that make sense? Perfect. Cool. Who wants to go next? Who was it? John Snow, you want to go next? I can see like 25 people accepted the mental mode invite, so it's quite a lot of you today. John, what's your name in TradeZella, John? Ayon. H. Why am I so blind? What is it again? Went past up. Sorry, guys. I'm really... Oh, here it is. Okay, let's take a look. So, P&L, profitable. Nice. Profit factors, profitable. Nice. Trade win percent. Concerningly low here. We'd want to get this up, but average win to loss ratio, absolutely amazing. So killing that. Lovely, lovely stuff. See here straight away that we've got these tilt days, right? So obviously your average win to loss is great, but for example, this loss here, which is 992, you can tell that this is kind of a tilt day, and you kind of lost your head there a little bit, just because even though your average win to loss is 4, that's only 1,100, and you lost almost 1,000 on this day. So as per everyone, I'm sure everyone's data that we're going to look at is going to have some sort of tilt involved and some sort of revenge trading. So as per everyone, just making sure to really try and cut down on the revenge trading and just really keep that level-headed rules. So again, using things like the pause rule, getting a little piece of paper, putting that next to you, and just writing on that little piece of paper, is my risk allowable? Does this trade fit my plan? And honestly answering yes, no to each one. And if you answer no to any of them, you get up, you walk away from your desk. Even using sort of external tools like For example, I know some prop firms, or you can download third-party tools that when you lose a certain amount, it locks you out your account for the day. Just those sort of things to help you stop. If you need a tool like that, then go and get one. Okay. So let's go into your reports. Let's take a look at just the overall here and see if we can see any patterns. So average realized R multiple for you, again, is kind of low considering your planned R multiple. Seems a little bit strange considering your average risk to reward. Average net daily P&L is 63. So yeah, average net daily P&L here has been 63 versus your average daily net drawdown. Have we got funded accounts on here? Because that would explain. Okay, so yeah, we have got funded accounts on here. So I'm guessing the issue with this data is because you're using funded accounts, I'm guessing that you've blown these funded accounts, right? So because of that, you've then got these really high drawdown periods when you do go on tilt and you blow these funded accounts. So this data isn't going to be 100% accurate just for that purpose. Yeah, exactly. So I can do what I can do here, but the data what I would recommend for you is really starting to collect some, solid data. So just really try and like one of these funded challenges, like really just stick to your rules, like religiously stick to your risk, stick to your rules, and go about it that way. But let's take a look at some of your day and time reports, see if there's any patterns. And what I'm going to do is I'm just going to filter yours by 15 minutes here. So Monday, you come out strong. We like Mondays. Look at this average risk reward. Absolutely great start to the week, even only with a 30% win rate. Tuesdays, you then give back a lot of the profits. Risk reward kind of goes out the window a little bit, and you've only got an 8% win rate. So based off this data alone, I would just cut out Tuesdays altogether. If maybe that be, you come into Mondays, whether it's strategy or psychological, there's something about this where you don't seem to perform very well on Tuesdays. Like this win rate is awful, and obviously this risk to reward is awful. So potentially just after Monday, maybe you need to review your sort of trades and what happened on Monday a lot more detailed, and really just reset before Tuesday so that you can come in as, as best as possible, because there's something going on here on this Tuesday. Now, whether that be on Monday, right? You actually ended up, over leveraging, stressed out to kind of make back that money that you lost. And then you come into Tuesday with that excess baggage that's kind of holding you down. And you're like, oh, okay. And you've still got kind of baggage from yesterday on you coming into Tuesday. Whatever the reason is, I don't know. But you need to come in and see what's going on in these Tuesday trades. So really investigate these 37 trades on Tuesday and see if you're actually following your plan. And if so, then you're strategy has a problem on Tuesdays, and if not, then you need to investigate why you're blowing up on Tuesdays. Because if we were to just remove this Tuesday altogether, like you would actually be really profitable. So something to think about there. Wednesday, kind of like a break-even day based on this data. Our multiple is pretty good. It's just the win rate's really low. Thursday, good day. Our multiple's good. And Friday, good day. Our multiple's good. So it's only this Tuesday that's the problem. So really, really, you need to deep dive and look into your trades on Tuesday and see what's actually going on here. Just looking at your trade times here. Interesting. Let's do this by P&L. So on these Tuesdays, it just seems like you're not really winning trades. So yeah, definitely investigate the Tuesday. Well, I'm not sure if it's strategy or it's mental. What do you think, John? But yeah, this Tuesday is definitely your biggest problem. Let's take a look at your symbols and see what's going on in here. Any patterns? So your best performing asset is Euro USD. Your least is GU. Looking at the data, like that's great data. I mean, your GUR multiple isn't bad. It's just your win rate is really, really low. I'm really curious to look into one of your trades. 1 second. I need to see what's going on here. Have you got any playbook set up? So no playbook set up. So your entry is there, your exit is there. Do you have playbook set up? Okay, so you're using the supply demand liquidity. Ah, okay, makes sense. Makes sense. Okay, yes, I think we spoke about this before, and you're still kind of continuing to do it. But what you're doing here, right, is if I come into this, I just look at your trade. Also, like, make sure to be journaling your trades. Like, we're not journaling here. We're not reviewing. We're not learning. We need to always be journaling, reviewing, learning, right? Because especially for you and what you're doing, okay, is so for example, supply demand liquidity, right? So you're trading supply demand liquidity. Here you went short. So let's say you go short off this, right? Let's say you went short around here. So again, you're not really, let's say you went short around there, right? You're exiting the trade almost instantly. Yeah, so you sold, okay, so you sold off this. So for you in particular, it looks like you're trying to get too precise with everything. So it looks like you're taking too many paper cuts. So what I mean by that is you're trying to refine your entries to be too precise, too perfect. And then you're taking a lot of paper cuts in the day. And then, for example, you're taking a $60 loss here, $100 loss there, $50 loss there, an $80 loss there. And by that point, you're already kind of in a hole and you've not actually ended up taking your actual trade because you're already in too much like drawdown for the day to the point where now you can't even take your trade because you've tried to be too precise. You've tried to sort of scale into these entries to get them so precise, so good that it's ended up backfiring on you a bit. So for you, what I would do is I would kind of just for now get off the 1 minute time frame, focus a bit more on the higher time frames, and really just try get consistent with that first. And then maybe once we've got some consistent profitability, we can, yeah. My biggest losing days, I'm really stuck in my daily bias and I keep taking the same setup with many entries. Yeah, exactly. Kind of as I thought. So yeah, that you know what your biggest issue is. You just need to sort of what you would benefit from a lot, actually. Let me show you, is doing something like this, right? So having these check-ins. So for people that get stuck with their daily bias a lot and they get very much married to their daily bias, doing these kind of check-ins, right? So here you write out the times of the day that you're trading, right? And here, for example, you write your bias. So my bias for today, right? And then 15 minutes later again, you write, okay, this is what happens. Really zoom out from a technical point of view, 50-minute, 1 hour, 4 hour time frame. This is what's happening now. And really just keep checking back in with yourself and sort of making sure that like, okay, is this actually an A+ setup or am I sort of on the wrong side of the market here? So that is something that I think you could benefit from a lot. But we need to, in your case, what's killing you is just these little paper cuts where you're just getting in too much. So whether that means just zooming out on time frames and just having one larger stop and just trying to catch the right direction and limiting yourself to 1-2 trades a day type thing, I think would help you a lot for now. So yeah, that's my feedback for you. That's where I think you can improve a lot. It's just limiting your trade count and just kind of almost punishing yourself in a way. So instead of allowing yourself to take these 5-6 different trades, right? Just say, okay, I only get one chance. I get one shot at this today to get it right. And if you don't get it right, okay, cool. You're done for the day. You come back tomorrow. And it's almost like a punishment for yourself because you kind of broke your rules, if that makes sense. Right. And then eventually, it'll get better and better. Can you check my average RR? So it was quite low, if I remember. So your average realized is 0.29. Let's go here. Multiple. But your overall win rate, right, is 3.88. But yes, that's high, but that's because you've getting stopped out 4 or 5 times before you actually then finally get the proper entry and then it goes your way, right? So yes, this number's high, but it's not necessarily good because it's taking you 4 or 5 attempts to get there. And then when you finally do get it, you catch the whole move. Now imagine if you didn't take those 4 or 5 paper cuts before and you only took 1 paper cut and then you caught the move. Think how profitable you'd be. So yeah, that's my feedback for you. So yeah, really keen to see sort of how you get on with that. But yeah, we need to cut down these paper cuts, right? These trades where you take, like, look at this, you take 1 trade today, 1 entry, 1 shot, great day. Okay. We take these and we take these 8, and it's like, oh, like paper cut, 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 paper cut. And these $50, you know, they don't seem like a lot, but it really does add up. Cool. Who's next, guys? People asking, there's the mental mode link. Sorry, I'm just going to go from the list down. Right, next person to put me, Prince. Yo put, actually, Millie Trades. Okay, Millie Trades. Millie, is this you? Millie. Yeah. Okay, cool. Let's just take a look at Millie's data. So Millie's data, 271 in total profits. Profit factors looking pretty good. Day win percentage is also pretty good. And average risk to reward is a little bit low compared to the win rate. So either one of these would need to increase slightly more. So whether your trade win percentage or your average win to loss, one of them kind of needs to improve. So which one of that is obviously depends on you and the strategy. If we just take a look at your playbooks. Okay, so we're trading a lot of EMAs, VWAPs. Okay, cool. The most traded one is probably this one. We haven't got that much data here to work with though, Millie. We want to see at least 100 trades of data, right? So your main task is to basically collect data, right? So you want to build this up. So then you've got 100 trades and you can really analyze your data. But again, same as everyone, and I'm sure this pattern will continue, right? What's let you down here is we're really, really profitable. We're great month, like great. Even this 73 is like, we're still, you know, we're balancing out here, and this is great. And then we have this one day where we kind of throw it all away. So I'm going to assume this is some sort of tilt or over trading, revenge trading situation. My problem was that initial week, and then I changed my position days, and now down day started. Yeah, that's unfortunate. But your R multiple, you know, you're not actually losing way much more than you should. Looking at the times as well, it doesn't like, it's not stupidly bad revenge trading either, because these are over an hour apart. So it doesn't necessarily look like you're revenge trading that bad. But based off the data we've got here, let's go into it. So again, for you, averaged R multiple, right? We need to be increasing this. You know, you're planning to hit 2R and you're hitting 0.39. So trust your process, trust your strategy, trust your plan, and just follow through a bit more on that. Net daily average P&L versus obviously net daily average drawdown. This, like, we can't be going into this much drawdown to make this much money. Like, yeah. So let's just take a look at this actually. Profitability, where's drawdown? Risk and drawdown, average daily net drawdown. So yeah, like your average daily net drawdown is a bit too high. So then you're, even on the days where you're making money, you're going into quite a big drawdown before you actually close out the day for profit. So we need to really cut that out. Just going into some of your reports, date and time, for example. So best day Thursday, worst day Monday. Most active day is Tuesday. So Monday, you've got a negative R multiple. Tuesday is really good R multiple. So that's good. Your volume is quite a lot higher on Tuesday though. So that kind of suggests to me that you might be sizing up a bit on Tuesdays. I think first things first, to be honest here, Millie, right? There's not much we can do with this data yet, but this is a great start and a strong start, but we need to get 100 trades behind you, and then we can really dive into this. So I think that's first things first, right? Is we need to start there. But yeah. that, like, obviously I could go into this and I can give you these insights, but because there's only, say, for example, 20 trades, you might take 20 trades between here and next week, and now this data is completely different, if that makes sense. So we need a higher sample size. But yeah, so come back to it. We're going to do these sessions pretty much every week or every other week. So when you get sort of maybe 50 trades, come again, and then we'll go through your data and we'll really dive into it. Okay. All right. Perfect. Prince Echo, Mon Prince 69. So Prince. What's your name? Is this you and Tradezilla, Prince? I will get through everyone who requests as well. Don't worry, guys. What's your name inside Tradezilla, man? Yep, sure. Don't worry, Billy, I will. We have also... Oh, we got Newman in here. What's up, Newman? Courtesy of Newman, who did our webinar the other day. So, yeah, big shout out to him. Yeah, this has been recorded. Prince Agbor. Am I blind? Prince, why am I so blind when it comes to these? I don't see your name on here. Have you accepted the mental mode link? Try Jacob Agbor. Jacob. Wait, Jay's. It's not on here. Make sure to accept the mental mode link, and then we can do it. Okay. We'll do Rohit for now. Rohit. Okay, cool. All right, so Rohit. Oh, okay, so this is good. See, here we've got quite a big sample size. We've got quite a lot of data. So we've got like over 400 trades of data here. So we're a lot to work with. So trade win percentage, really good. Average win to loss is what's bringing you down here. So let's look into whether that's sort of a confidence thing or maybe your strategy needs improvement, because this Zeller score, we need to get this right up. So looking at this, your drawdowns seem kind of steady, to be honest. No outrageous sort of dips here. Nothing like absolutely crazy, but your spikes in profit are a bit extreme here. So there's an issue there. So let's look into this. So first page, performance. So what have we got here? So realized R multiple. Again, just another thing for you as well. Not sticking to your plan necessarily, right? Closing down in places where you shouldn't be closing. So really just trying to make sure that we're properly following our plan. And if we are following our plan and it's not necessarily working, then maybe we need to go back test and refine our plan and see what's actually the issue there. But yeah, these drawdowns that you're going in compared to the P&Ls that you're going in. So like, for example, look at this net max daily drawdown versus obviously your P&L that you're going into the day. So the largest net profit versus net daily drawdown is like crazy. So that difference, we need to basically get rid of that. And obviously your largest loss is a lot bigger than your largest profit. So again, we need to get these R multiples up. We need to shorten these losers and we need to increase these winners. So ways to do that is just allowing your trades to run further, going break even when you can, and just cutting down the losers, and maybe taking partials and leaving runners. That type of thing are just some ways that you can go about doing that. But yeah, so best performing day Wednesday, least performing day is Monday. So let's have a look at this. So volume and trade count. So your biggest trade count day by a lot is Wednesday. And it's actually a pretty good win rate. All these days actually have a relatively good win rate, which is interesting. So Monday, your average loss versus your average win is like crazy here. So we've got a 300 average loss for a 33 average win. So honestly, like looking at this, just like maybe for you, right, I would really dive into these trades on Mondays and see what's going on here, right? And see, are you actually following your strategy or are you forcing trades here? Because potentially with this data, just at a quick glance, I would look at potentially just cutting out Mondays Maybe your strategy doesn't work very well on Mondays and you sort of get chopped about. This common sort of situation that happens on Mondays for some people. Or maybe it's just that you get a bit overexcited when it comes to a Monday and you're itching to put a trade on, that type of thing, and you don't end up performing very well on Mondays. One or the other, we need to look into what's going on this Monday and really investigate the data on a Monday. Tuesdays, again, your risk to reward just isn't really there. Average loss being a lot bigger than your average win. Win rate, again, kind of, this would have to be kind of like around the 80% mark to make this make sense. So this currently doesn't make sense. Wednesdays, again, this is kind of a 1-to-1. So we kind of want to get this up to like a 2-to-1. So really start trying to, although the profit's great on a Wednesday, but looking at your volume, it's really increased. So potentially what I'm seeing here is, you come into Monday, bad day, Tuesday, bad day, and then Wednesday, potentially you might be sizing up just because of the volume increase here, and then kind of getting those, that win back through these Tuesdays, but it's not necessarily following your plan, not following your rules. So something I would definitely want to look into there as well. Thursday, again, we're just negative on the R multiple here. So what you really need to look at doing is just increasing your winners and like limiting your losses. So obviously, like I said, if you get a reason to go break even, if you get like a valid reason to, moving your stop loss to break even, and when you're, a trade really is going your way, possibly scaling into your winners, that type of thing. And just letting your trades run a little bit further according to your plan and sort of having more confidence in your strategy. Have you done much backtesting? So no backtesting. What are your playbooks looking like? So we haven't set up a playbook here as well. Do you have clear defined trading rules of like a plan, if you know what I mean? So like, this is my plan. This is how I get into trades. This is my strategy. Because if not, we really need to nail that down before we do anything else. Okay, is typing. See, still figuring it out. Yeah, so that's potentially the issue, right? I think before even sort of going into a live market, right, and risking money, let's really like figure out what our strategy is and what our plan is and how we want to approach the markets before we even start risking, potentially real money and just spending our time there. So maybe that's obviously backtesting just a bit more, because what we want to get is we want to get this data that says, this strategy is profitable, right? If you don't have confidence in your strategy, how can you expect yourself to hold on to these trades and let your trades take profit, right? Because you need to build up the muscle in your brain that's basically saying, okay, yeah, I have confidence to hold this to here because I've seen it happen 100 times. Now, how else can you do that without doing some sort of back testing or forward testing in the market and collecting this data, right? Can you imagine how confident you guys would be if when you came to reports, you saw, even though that you only had a, let's say, 40% win rate, but your average R multiple was like 4, and you had that over 1,000 trades and you saw how profitable that was? Can you imagine how much confidence you would have in your trades and the data, right? And then that's also going to allow you to take the emotion out of it, because you just think, okay, I'm just trading my system here. My system makes me this much over this period of time. I don't need to worry, right? So that's a lot to do around. Mainly price action with break and retest, but still a long way to find an edge. Yeah, so first things first, I think for you is finding that edge. And also like for you as well, right? Doing a thorough journaling and review process so that you can refine and actually investigate your edge. So let's take a look at some of your trades. For example, you took some trades today. I'm not going to look at these because this is not a fair assessment because you might not have had time. But if I go to yesterday's trades, for example, are these going to be journaled? Okay, so they're not journaled. So what we really want to be doing here is coming into like these trades, for example, and looking at this and saying, okay, what actually went wrong here? Like, why did I lose this trade? So you entered this trade at 10 a.m. and you got chopped around pretty much all day, and then you ended up exiting, right? So look into that. Why was the market so stale? Why did we actually exit here? Were you just mentally drained because you got chopped around for so long, and then you ended up exiting, and then trade, obviously went the other way, but again, things to look into, and actually just journal, review, and sort of be like, okay, this is why I lost this trade. this is what happened, this is what I learned, and make sure you're learning from every single trade. And that's how you can refine your edge and obviously get an edge in the market, all right? From doing that review process, from doing that back testing, from putting in those reps. So that's first thing I would be doing for you, Rohit, is really nailing down an edge, like a proven system, proven strategy, and then I would take it from there. Okay? All right, cool. Who's next? Just able to so Jacob, did you do? All right, Jacob. Prince. Here we go. Let's see. Right, so looking at this data, so we've got these big tilt days, right? Straight away, like kind of like this is kind of a bit boom and bust, if you know what I mean by that, right? Now, when I say that, right, is that we've got these big red days and we've also got these big green days, and they kind of just pop out of nowhere. Okay, so that means, you know, although we're catching these big wins, we're also taking these unnecessary losses. So we need to get more of a fixed risk going on. So using some fixed risk rather than dynamic risk for now, just until you have sort of consistency. So risking 0.5%, 1% on a trade, and just like really sticking to that. Like, I am only risking 1% on this trade, on every trade I take on this day, type thing, just for a while until we start to see some consistent data. Again, trade win percentage is good, but again, for you, R multiple is what's letting you down. So again, just not winning more than you're losing, right? Even if this was just one, you would be profitable. Okay. Now, although you are profitable here, right, and that's great, but the issue is you're profitable not from following a system, you're profitable from gambling, which isn't a habit that we want to get into, and it isn't sustainable in the long term. So we need to get this up, like to at least a 1. Although this is profit, again, we can't let that fool ourselves. So let's go ahead and look at some of the data here. So for example, like you can see straight here, right? Average losing day, 100, winning day, 300, great. Oh, big winning day here. We like this. So you got this one big catch on SPY here for over a K. Why wouldn't it let me view the trade here? What's wrong with this? Okay, there's something going wrong with that. Never mind. All right, let's just go into the reports here because for some reason I can't click into those trades, I'm afraid. But let's see. So, performance. Let's see. Average daily net P&L. Net P&L 909. Max daily drawdown. See, look, again, this is just kind of proving my point that although in profit, you're having these massive drawdowns before you actually go into profit. Like this amount of drawdown, right? Your average daily net drawdown is 3K, which is like crazy for the amount of profit that you're making. So this needs to like really like, we need to cut down on entering on these really oversized leveraged positions. And also, again, for you, just not following your strategy, not following your plan necessarily, right? We've got 3.1 average planned R multiple, but we're only getting 0.65. So we just need to become consistent in our habits and our patterns when we're trading. So only risking 1%, following our plan, having a strict sort of process that we follow day in, day out when it comes to approaching the markets. Let's just take a look at some of your things and see if we can see any patterns going on here, though. So day and time performance, best day is Thursday, worst day is Friday. So straight away looking at from this, like look how much larger Friday is. It's not even necessarily the highest volume, but it does seem like you kind of get killed on Fridays. And like this average R multiple is absolutely terrible. So I would just be cutting out this Friday for now. Just because maybe it comes to Friday, you're trying to force and hit a home run just before the weekend, trying to end on a high, or maybe your strategy just doesn't work very well on Fridays. I don't know. But for you, the place to investigate and where all of your losses are coming from pretty much is this Friday, because you've got pretty consistent trade counts across all the days, right? But Friday and Wednesday are the two highest, okay? But Friday, you really don't perform on Fridays. So for now, I would look at cutting Fridays out and just investigate what's going on Friday. And if that's whether you're following your plan or if, you're actually doing something in your emotions sort of thing to obviously screw you up there. So looking at the times on Friday, if we go into it, so you take a loss. Yeah, so on Friday, look at this, right? So on Fridays, you're coming into the markets, you're taking a loss first thing, and then you're heavily just doubling down and then trying to make back that loss. And then you're digging yourself into a big deep hole. But if we just didn't do this, like this here, these first two trades for the day, where we end up going in this big drawdown, think how profitable we'd be. We would be up 3.5K. Okay. So this net P&L here that says 600, that would say 4,000 if you just didn't do that on Fridays. That one bad habit on a Friday morning is costing you 3.5K. Crazy when you put it in that perspective, right? So obviously just carrying on here. Investigate what's going on Fridays, right? And just see what is actually a problem, whether you're the problem or the strategy is the problem. And really just sort of working on that. Looking at obviously what you're trading, SPY. Seems like you've got really good performance on SPY, but your most active thing is actually Tesla. Tesla you do pretty well on though. This average R multiple though, again, it's still a little bit misleading. You do trade Tesla a lot though. Your most traded asset by a considerable amount. And overall you're profitable, but again, I'm concerned that this is kind of more gambling in a way and kind of more boom and bust. So but SPY, you do a lot better on, right? With a 70% win rate and almost a 1-to-1, your performance on SPY is really, really good. So I would consider, looking into SPY and kind of being a bit more consistent with SPY and maybe stepping off the gas a little bit on Tesla, based on this data. But again, still can trade Tesla. We had a bad day for Tesla in January. February was okay. March was okay. April was good. October's good. November's good. Okay, so it's just this January where you kind of had a bad bounce that's held you back a lot. But yeah, overall, I mean, not too much concern there. Keep trading how you're trading, I guess, and kind of just, it seems like more so your issue is with sort of emotions, revenge trading, that sort of thing, rather than your strategy itself. And then that causes you, obviously, knock-on effects. You don't hold your trades long enough, that type of thing. But yeah, Friday would be where I would start here. I would really look to dive into this data on these Fridays and really analyze your losses and ask yourself, am I actually following my plan? And taking it from there. Okay, cool. Videa, and then we'll do Billy. So we'll do Videa now, and then we'll do Billy after, okay? Any advice on how to choose strategies to perfect as a beginner? So obviously, if you're a beginner and you don't currently have a strategy, first things first, find yourself a strategy that kind of resonates you. It's not one strategy fits all for people, right? Some people, for example, psychologically can't be a scalper. And the reason for that is because they just can't handle all the paper cuts, they can't handle all the losses, and it sends them into tilt. So they have to go into more of a swing trading style, just because they go into tilt too easily when they start taking too many trades and they lose their mental clarity. So for example, my strategy might not work for a lot of you in here, just because psychologically we can handle different things. If you were to give 5-10 people all the same strategy, I can guarantee you those 5 to 10 people don't all trade it the same, just because of their psychology. And when I say things like that, how long they can hold a trade for, can they handle big drawdowns? For example, some people thrive with really high R multiple, whereas others need a really high win rate strategy to keep them sane. So you need to kind of figure out what your personality is, and then sort of build your strategy around your personality and kind of adapt to your psychological weaknesses. I think is a good sort of tip to think about when doing your strategy, because the psychology and the weaknesses that obviously come with psychology, they don't necessarily ever go away. You just get better at controlling them. And some people never really even get grip on controlling them. They just get better at adjusting their strategy to obviously help accommodate for their psychology. But yeah, sorry, little rant there, all over. Videa. Fidea. Here we are. Let's do it. Okay, cool. Oh, Fidea. We've got some great data here. Over 1.5K trades. So we like this a lot. A lot to work with. Filter for 2025. Oh, you're gonna make me cry. Okay. So we don't want these archived accounts, right? I'll just literally filter for 2025. Don't worry. This year. Okay. So we've got about 250 trades to work with here. So not bad, not bad. So we've got net P&L, trade expectancy. Okay, interesting widgets. So again, your average R multiple is kind of hitting you here, right? Trade win percent, 65% is great. Our multiple is the concern here. So 0.58. We want to get this up to at least really a 1. Struggling with for winning trades, moving stop loss too quick, cause an exit, a break even for losing trade. Okay, so let's take a look at one of your recent trades here and let's see what happened. So this one you did really well on. So this is a great trade that you took and you followed your plan pretty perfectly. I don't know why it's not letting me do this. Oh, this is really, I think it's because you haven't given me full access, so I can't like mess around with your stuff, if you know what I mean. So yeah, sadly I can't actually review the trade itself properly. Let's take a look at one where, so here, this is one where you move to break even. Again, I can't review the trade. Can you grant me full access to the account just so I can look at the actual trades itself? But I think for you, right, you need to have kind of like a rule where it says like, so let's just, for example, what are you trading? Trading view. I'll just go to, so if I was to just go to ES, for example, here, right? So let's say, right, you're a break and retest trader, right? Trade you just saw as a firm entry and then add to the losing trade. So say if you're a break and retest trader, right? So this is your break, this is your retest, and then you carry on going, okay? Maybe, for example, for you, we need to set up like a rule. So for example, this is your retest zone. So this is your like break here. So let's say here, right? This is your zone. Break out of this zone. No, sorry. This is your zone, right? Break out of this zone, and then you enter here, okay? For example, you don't go break even until we take out this high, yeah? Just something like this to give yourself like a technical reason with evidence to back it up to basically say, okay, I don't just randomly go break even the second I go into profit. I have some sort of reason to say, right? Because if you keep getting stopped out for these break evens, then, you know, maybe we need to look at that. Maybe that doesn't actually work for you. Move in, stop loss, cause, and exit. So let's take a look at some of your reports because it looks like you've got really good tags set up here. So execution. Let's see. Improper so your most common thing is that you're getting a late entry. So I would actually review your trades a little bit here and just be like, okay, why am I getting a late entry? And seeing how you can improve that to sort of, you know, really optimize your entries and getting this sort of late entry. But like, if you look at this, right, it seems like moving to break even is actually helping you a lot because you are eliminating quite a lot of losses. Although early entry, how are you losing on that? That doesn't really make sense. Oh, right. Early entry. Sorry, I read that wrong. Early exit. So again, just letting your trades, like we've got over, so your most common mistake that you actually make is exiting early. So I think for you, you need to have a little bit more confidence in your trades and allowing them to run more to your TP. Because the thing that's really holding you back here is your average R multiple, right? And your biggest mistake that you're making, according to your tags, is that you're exiting early. So the two there correlate, right? Is we need to stop exiting early. We need to trust the plan a little bit more. and sort of allow that to go. Now, obviously, I know before I may have advised to go break even a little bit more to cut that down, and we can see an improvement in your win rate, which is great. But now we need to sort of clearly define what moving to break even actually means for you, so that we can, actually allow our winners to, go forward. I did pack testing, confident strategy, then even then making these mistakes, how to overcome. So what mistake specifically are we making that is concerning you? For winning trade, moving stop loss too quick, causing exit at break even. For losing trade, adding more to average draw down and increasing risk. Right. So for a losing, so just one key rule to sort of stick by is don't add to your losers, add to your winners. So if a trade's going in against you, don't keep adding and adding and adding, right? Hoping that's going to turn around. That is just never a system that's going to work long term. Okay. Every now and then, yeah, it's going to work and you're going to catch a big win and you're going to feel great about it. But that's just a bad habit and a bad process to get into. You can add to your winners, you don't add to your losers. So that's first things first. We just cut that out. We need to cut that out. And just have some discipline there and say, I can only add to my winners, not my losers. Okay. Next thing, for winning trade, moving stop loss too quick, causing exit at break even. So again, there we just need to kind of define, what does break even mean for us? And we'll maybe not doing that even at all. I think you need to back test and actually find out, okay, when I go break even, this is my win percentage and these are the results that I get over a longer period of time. And this is how that works out for me. If I don't go break even, this is how that works out for me. Yeah, I can, yeah. Break even is that. But I mean, like, for example, as I explained here, right? You only go break even when this high is taken, for example. Like getting some sort of rule and practicing that and preaching to that and sticking to that of what, this has to happen for me to go break even. I can't just let it go 10 points in my favor and then I'll go break even. We need like a specific rule. So maybe when you get to 1-to-1 R multiple, then you go break even. That type of thing, not just a random break even because we're in a little bit of profit. And if you are going break even too soon, that might potentially mean that you're oversized on your positions so that you're scared to actually take the loss. So you're trying to protect your downside straight away because you're a little bit oversized. Consider this, consider trading at just like a really, really small size and seeing how your performance is for a week. I'm doing the same even with 1 micro. Okay. So it's not necessarily that. Okay. Interesting. I think for you, you really need to figure out your strategy and what break even means, like not what break even means to you, but like when can you go break even? When is it acceptable? We need to optimize. Like, I don't think going break even is a bad thing at all, but like for you, it might, for example, if you're going break even too early after like 10 points, all right, try this, for example, all right? Only go break even when you're up at least a 1 R multiple, okay? What's your average planned R multiple? That's what we need to look at. So your average planned R multiple is about 2, okay? So try this instead and just backtest this and see how this affects your strategy. Go break even at a 1-to-1 and close 50% of your position at a 1-to-1, okay? So at a 1-to-1, lock in 50% of profits and then go break even and then allow the other 50% to run to that 1-to-2 target and just see how that affects your data. And if that helps, then obviously great. We've solved the problem right there. Okay. I think that's the first place to start. And then obviously, if that doesn't work out very well, you keep experimenting until we find what's optimal for you. But I think that alone, just a 1-to-1, then go break even and close 50% will help you a lot as well. And you can also then leave your trades to run on longer because you've also at that 1-to-1, you're now break even, you've locked in 50%, you've paid yourself for the day. Then maybe we can even look to extend for like a 2, 3, 4 R multiple from that point, especially if you're a break and retest trader. Does that make sense? Yeah, we'll do that. Thanks. Cool. That's the first place to start anyway. But just looking at, obviously, we'll go into your reports a little bit anyway and see if there's any patterns here. Patterns, Monday. The message that just, yeah, that's a fake account. I won't DM you first, and I won't try to sell you any services. Yeah, just ignore that. That's obviously a scam. So looking into this, Friday's the best day. Wednesday's a pretty good day. Thursday's a break-even day, which isn't bad at all. But yeah, this Monday and Tuesday is what's letting you down. Curious to go day grade. So you're actually tagging these as well, which is good. So these C setups altogether that you're tagging, they don't actually perform well to you. So potentially I would just look out cutting out these C setups altogether and maybe implementing a rule where you only take the B setups up or above. Again, just trying to cut down on the losses. I think a lot of this is like, how can we cut down the losses and just keep the winners? Biggest mistakes, FOMO is a big one for you. So you're obviously a little bit scared to miss out on the move. Fear on the flip side, which is interesting. But yeah, those are the two biggest things for you. So FOMO, which I'm sure you already know. Let's see on your setups. So high of day reversal, low of day reversal. Which one are you taking the most here? Trend breakout. So trend breakout is like, strategy wise, is really, really, really profitable for you. Like this is a good strategy. This is a good R multiple and this is a good win rate. So it seems like a lot of the time also you're like 10 trades here where it's cost you 1.8K. So almost the entire profit that you've made on this great trend breakout strategy, but you've basically blown that away in no setup trades. So, you know, yeah, one thing to cut out, obviously sticking to your plan and sticking to it like religion. And also on this plan, just looking into this one-to-one R multiple system and going with that. Because the strategy itself, very, very profitable. But we just need to fix the other parts when we're not following our plan as much. But yeah, I think for you, let's experiment with that one-to-one system and let me know how you get on. You feel free to send me a DM and I can help you more with that. What time is it? 10:02. 10:02. Okay, we'll do some more. Who else requested? We've got Billy. I know Billy's been asking for a minute. Billy, what's your name inside TradeZella? And then we'll do Billy, PTX, and then we'll call it there. Okay, Billy, what's your name inside TradeZella, man? Billy Mead. Okay, here you are, Billy. So we've got about 40 trades to work with here. We've got some good P&L straight off the dot. It seems like a lot of you all kind of have a very, very similar problem. If you notice like a recurring pattern, right? Is that we've all got this good trade win percentage, but we've all got this bad sort of average R multiple. We need to kind of flip this on its head, of course, right? But again, right, initial first problem is these tilt days. Like we've actually got a pretty good like this is good consistency right here, Billy, right? Like lots and lots of greens, but these red days, you're just taking way too big losses on these days. Like imagine if these red days were just $50, $50. You'd be having a great, great month right now. Like you'd be ecstatic with yourself, right? So yeah, obviously the revenge trading, the till down, and like this drawdown is like a little bit nuts. So obviously we're going into like 500, 600 drawdown, and before we turn around and we're making this profit. So we really, really need to cut down, right? Exactly. I exit too early from fear of losing and leave so much profit on the table with my initial setup. Yeah. And I think the reason that you're too scared and you have this fear of losing is because you're potentially risking too much on a position. So then you're like, okay, I can't afford this loss. Like this loss is too much. So then that kind of scares you out of your own position. So maybe just like, you know, cutting down on the size and focusing more on that consistency could help you a little bit more. Been asked for a minute, only have a few trades, but I'm brand new to trade. Yeah, used to be profitable. How many trades do you have inside TradeZella Limitless Trader? And then we can look to do you as well, but we need sort of like a minimum amount just to get some good data to work with. That's all. But yeah, we can look into your stuff. I just need to know a little bit more context and a little bit more information about that. Let's go into your reports though. So obviously main problem is obviously this over risking, this drawdown. And again, the issue when you say about your confidence, right? That's also like stemming from that. So when you say about your confidence, it's because you've gone into too much drawdown, you're oversized on your positions. So we just need to really cut that out. You're not filling in your average R multiples on your trades. So that's something we need to start doing like right away. So actually coming down here, right, putting in your stop loss and TP, make sure to be doing this for all your trades just so you can optimize your data better, okay? So make sure that we're doing that. Next thing, let's take a look at your data. Coming back to here, sorry, volume, profit, loss. So overall, like your average loss to your average win in terms of largest is okay. So win streak, so max consecutive losses is a lot higher than your max. Oh no, this is good actually. Max consecutive wins is way higher than your max consecutive losses is. So that does actually show to me that you've got a profitable strategy. Okay, it's just maybe your mental side, like your psychology, that's letting you down quite a lot. Yeah. So yeah, you know what your problem is, right? But you just need to sort yourself out in that sense. So I'd recommend just like coming to the university. This is a really good webinar that I think would help you a lot that we did. So if you haven't watched this, sorry, I got a really watch this webinar. Mind Over Markets, Mastering Trading Psychology. And if you watch that webinar, I feel like you will literally feel like it is made for you. Like all the problems that you're having, you will be able to relate. So I would highly recommend going and watching that webinar. And I think some of the techniques and some of the tools in that webinar would help you out quite a lot. Because as we can see here, like your strategy is great, but you're just having a problem with till over. I think a lot of your problem, that, and obviously tell me if I'm wrong, is coming from greed. So like FOMOing into position and then getting a little bit greedy and trying to make like this big win, and then that's obviously knocking on your confidence and all sorts of things. FOMOed into an entry wouldn't serve, and no stop loss. Huge lesson learned that day. Yeah, but obviously that's the main thing. We're always learning every single day. That's the beauty of trading. You're forever and ever learning. But yeah, like strategy again, profitable Monday. This average R multiple isn't great though. And I think, as you say, that's just because you're lacking confidence to hold these trades, maybe because your position size is a bit too much. So you're scared of taking that loss too much. And again, if we just, decreased our position size, focus purely on execution, purely on strategy. I think something that would also help you a lot is just sticking to a fixed percent, like a fixed 1% for now, and really just getting that consistency, and then you can scale. So then for now you can do 1%, and then in a couple of weeks, once you've shown you've got consistency, then do 2%. Then you can go from there and go 3%, 4%, or whatever, and just keep scaling that way. But don't let yourself scale until you've proven to yourself the consistency. Once you've then proven that you've got the discipline, then, okay, you can say to yourself, all right, I'm allowed to increase my size now and I can scale. Okay. I think that's something that would help you a lot, because then it's like, if you can't do 2 weeks of just following your strategy at a fixed risk, then we've got a serious psychological problem here that we need to sort out, because you're never going to allow yourself to scale if you can't just follow that for a couple of weeks. Does that make sense? Yeah, good idea. Cool. But yeah, let's go. So obviously trade times, I mean, like none of this necessarily is like too important because we know the issue is kind of psychological, but yeah. Least performing day Sunday. Interesting. Any tags set up? So really, we really want to be like tagging our trades properly as well. So like not just tagging based on like, so here you're exited too early, left profits, but not just tagging things on that, like tag things based on entry time frame. So start tagging based on entry time frame. I entered on the 1 minute, 3 minute, 5 minute, 15 minute, 1 hour, etc. Right, and then you can start to build out on data on which entry time frames suck. Tag based on, I don't know what type of trader you are, but let's say you were supply and demand trader, right, and you started tagging trades on a 4-hour demand versus a 1-hour demand, or a 15-minute supply versus a 30-minute supply. That type of things. Let's start collecting that data to optimize your strategy. Okay. So scalper enter on 1 minute 99% of the time. So yeah, start creating tags on like every single aspect that goes into your strategy and seeing which bits work and which bits don't. And then when it comes back at the end of the month, you can just click into reports in like 1 second. And then you've got a whole month of data then where you've set up these custom tags and you can be like, okay, that's what works for me. That's what doesn't. And you didn't have to do any work to get there. All you did was tag a few trades along the month. And then you have all these insights straight away to look at. But yeah, also note a thing for you, I think as well. Yes, there is. Yes, there is a tagging video. I think you'll enjoy this one as well. So I'd watch the psychology one and I would watch this one here. This one, no, not that one. This one, master your trading gigs, tags and reporting. So I would watch the psychology one and I would watch that one. And yeah, I would take it from there. But yeah, I forgot what I was going to say, but I did have some good advice for you. It'll come back to me at some point. But yeah, I'll keep up with you and we'll check in and we'll see how you're going. And if you do have any problems, obviously following your psychology, that sort of thing, let me know. I'm always here to help. Okay. Who's next? So we said we would do PTX and then we'll call it a night there, guys, I think. These sessions always end up going a lot longer than I anticipate. Right, PTX, what's your name and trades element? Namrata. But yeah, Billy, let me know how you get on and then join the session next week and, you know, we can see how your progress has gone. Namrata. Why can I not find you? Try PT. PT. Oh yeah, it's right there. Okay, PT. No worries, my man. Have a good night. All right, so PT, trade win percent. Very, very nice. Very nice. I like that a lot. Again, average win to loss is what's crushing you here. So we've got this one sort of tilt day here, and then we've also got this one sort of extortionate win day, which is a little bit kind of concerning here. Was this like a big win? Was this an over leverage, or was this like just caught a really good R multiple that day? Is a question I have personally. But this seems pretty well managed overall, right? Going to break even like this. Losses here are low, low, low. And then we've got this big kind of revenge day. So same again for you. We took a trade here. We kind of went on tilt and we lost a lot more than we should have, I think. So yeah, we're short here. And then not only were you short, you added to a loser here. So you were short here, the market went against you, you added to that, and then you got stopped out. So we need to make sure that we're not doing that. And, you know, we're just practicing these good habits in general. But let's go into reports. How many sort of data have we got here? So we've got February, March, April, and May. So good amount of data to work with. Let's take a look. So average daily volume is really high. So again, for you, you're not putting in your R multiples for your trades. I suppose you're trading options, yeah. So you don't necessarily need to, it doesn't really work the same way. But just looking at the raw data then, I got a filter here, yes I do. So what have we got? So number of consecutive wins, number of losses is great. So indicating we've got a profitable strategy here, which is really, really good. So I think any of your issues would be psychological, not necessarily strategy based. Total trading days. So total winning days is 45, losing days is 18. So again, for you, I think the thing that's really bringing your P&L down is probably just when you do have a losing day, you make that losing day a lot bigger. Because if we were to just go based off like fixed risk, 1%, you know, you're going to be really profitable based on these stats. Like 45 winning days to 18 losing days, that is a great, great ratio. But our P&L isn't extortionately huge because we've lost a lot more on these losing days than we planned to. So for you, it's just cutting out those losing days altogether. And not altogether, obviously, we have those losing days, but just making sure those losing days are really minimized and we're not scaling in, we're not doubling down losing positions. Would be the main thing, because I've just seen obviously your biggest loss this month is because you added into it whilst it was going against you, and you kind of just got a bit married to your bias there. But let's go into this a little bit more. So Monday you come out strong. Look at this R multiple, amazing, great stuff. Tuesday is kind of a break-even day for you. Okay, not too bad. We've got a 70% win rate here, but we're kind of only just in profit. So something to look into here. Wednesdays, about our multiple is even. So my question to you would be, why on Mondays is your R multiple like so good, and then on Wednesdays and Tuesdays it's like kind of just not as good? Like, what's going on Mondays which is so different to the rest of the week? On Mondays, are you trading your plan a lot better? And then on Fridays, oh my God, like Fridays, no offense, but you kind of just lose it on Fridays. Like, we've got an 81% win rate, 81%, but our average loss is 656 and our average win is 113. So psychologically by Friday, like, you are mentally burnt out and you're losing it, my friend, on this Friday. So yeah, really something that we would like to sort of cut out there to sort this out. But yeah, so I would look into these trades again and just kind of be like, okay, what's the reason I'm doing this? I think something that's good for you then in this case would to, when you do make like a mistake or you do tilt or you do double down, have a little piece of paper next to you and just write, okay, what was the reason that you tilted? So like, what was the actual thing that happened to make you go on tilt? So for example, maybe it was a big candle that went the opposite way to you, right? So if that's a trigger for your tilt, write that down and start recognizing what your sort of tilt issues are. So for example, I don't know, let's say there's a big candle that goes the other way, make that little note down. Let's say if there's no volume and you get chopped around, that causes tilt, make the little note down and start to track like what happens to cause your tilt, and then also how common that is and which one kind of thing like your worst ones are. And you can also go ahead and track that with tags, as I kind of showed a moment ago. Symbols wise, let's have a look. So with symbols, I mean, yeah, like we are just profitable, to be honest. Like strategy is good. Strategy is good. We just need to cut out doubling down, and we need to let our winners run. I think you know exactly where you need to improve. I think you already know. No worries, man. Have a good time. No worries. We've got another webinar on Sunday as well, guys, by the way, those of you that are still here and have stayed this long. Make sure we're tagging our trades more as well. Are we actually journaling as well and reviewing? Like this 600 loss, did we journal it? Let's see. No, we're not. So yeah, we have to be journaling, we have to be reviewing, and we have to be holding ourselves accountable, right? The main sort of growth that you're going to get is through not necessarily journaling, but reviewing. So when I say that, like, for example, we now know, we came into reports and we know that your issue is psychology, okay? So let's say we came onto Fridays and we know that Friday is the day, right, that we have issues. So Friday is the day that we have tilt. Okay, what's going on Friday? Let's look into our trades on Friday. But because now we go to Friday and we filter, let's say here, and where am I, date and time? Day of the week, right? So now we go on Friday and we filter all our trades to Friday and we're like, okay, cool. These are all our Friday trades. Now let's look into our Friday trades, right? Now, how hard is it for us to review these trades and see what went wrong because we haven't journaled it? It's almost like we have to go back, look at the chart, and then kind of reinvent this entire trade again and figure out the state that we were in. Because, like, how can we know our issue is Fridays, but how do we review this Friday? We have nothing here to look back on, right? So how are we supposed to grow if we're not doing this, right? Does that make sense? Like back here, like we took this trade in November 2024. Do you remember this trade? Let's be honest. Are you really remembering a trade more than a week ago? Yes, you might remember it, but you don't remember the emotions that happened in the moment. You don't remember exactly the strategy that you were using, the reason for your entry. So that's why it's so, so important to make sure you're making notes about these trades, because reports, things like this is amazing, right? It's so good because it shows you where your issues are at a quick glance. Like we know, for example, like let's say here our worst performing asset was Tesla by a long shot, and this was our issue. Okay. So now it's like, okay, great. We know where our issue is at a quick glance. We got that from reports. Now we need to go investigate why these trades aren't doing well. But if we haven't journaled, we can't go and review that. So you all need to make sure that you're journaling so that not necessarily today, right? You don't need to go and review today, but in 2 weeks' time, or when it comes to the end of the month and you're doing your end of month review and you're looking back at your data and you're thinking, okay, wait, what went wrong? So that then you can review and realize what actually went wrong, rather than every time you come back and look at your prior trades, there's nothing to look at. Does that make sense? Cool, perfect. But yeah, I think we know obviously what your issue there is that we're scaling into losers and we're not basically, letting our winners run. So for you, it would be definitely don't be adding to our losers, right? Try keep those losses as small as possible. Okay. If it goes against you aggressively and, just allowing yourself to be like, okay, yeah, I'm going to cut this loss. I'm not going to make this any worse, and just kind of letting yourself come to terms with that. And then also not letting those big losses that you take affect your winners. So following your plan, allowing your confidence to come through, and allowing your trades to actually hit your initial profit targets rather than closing them early. And the reason that you're closing them early is because you've taken a big loss sort of another day because you added to those losses. So again, just not scaling into those losses would also allow to help you let those winners run further. Okay, so that would be the number one thing to you. And also make sure to start journaling your trades properly, tagging properly, that type of thing. But yeah, that is what we're going to do for tonight anyway, guys. I hope you guys enjoyed. I hope you guys sort of learned a little bit about how you can go into your reports and then go into your data from that. So yeah, cool. But yeah, we do these sessions every couple of weeks. But I promise you, if you like genuinely review and journal regularly, like you give it like a month, 60 days, and actually journal and review every single day, and I promise you the amount of growth you will make is exponential. Like if you actually have the discipline to do it and stick with it, you will be shocked at how fast you can grow. Right, no worries, guys. I hope everyone has a good one. We've got a webinar this weekend as well, for those of you that are interested, and it's how to deal with FOMO and hesitation. So if you guys suffer from FOMO and hesitation, we're going to be spending a session actually very much so deep diving into the reasons why traders get FOMO, hesitation, and how to combat that, techniques to sort of help you overcome that. So yeah, it should be a really good one. It's this Sunday at 12 p.m. at EST. So yeah, cool. All right, I'll see you guys on the webinar on Sunday. Appreciate you all joining, and yeah, I hope you all have a good week and weekend. So catch you all in a bit, guys. Thanks so much.